Good afternoon, everyone. We are excited to be here today to give you some market insights on what's going on within the market in Arizona. Today, I have with me Kevin Kaplan, who is our Vice President of Marketing and Business Development. Welcome, Kevin.
Hi, everyone.
I have Laura Mance, our President of Long Realty. Hello, Laura.
Hello.
I have Casey Woods, who is our Regional Sales Manager for Long Realty. Welcome, Casey.
Good afternoon.
And I have Matt Rivera, who is our Regional Mortgage Manager with Prosperity Home Mortgage. Hi, Matt.
Hi, good afternoon.
I am Renee Gonzalez, and I am the CEO of Long Companies, and we are excited to be here. So let's tell you what we're going to talk about today. First, we're going to talk about 2021. It ended, and we need to talk about the trends that we saw in 2021. And then we're going to spend a little bit of time talking about 2022 and where we see the market going forward. And then we're going to spend some time talking about, real solid advice for buyers and sellers as they enter the real estate market. Kevin, I'm going to turn it over to you to get us started.
Okay, thanks, Renee. So a couple things before I get started. One is you're on Facebook, and we'll be looking for questions from you all and addressing those at the end of our presentation. So if you have a question, type it in the chat. We'll be monitoring that and hopefully get to your question at the end. As I talk about really what happened in 2021 and where we're at today, and then we talk about where we're going, I also want to mention we're going to talk about some different communities and areas around Arizona. But always, these are trends in those greater areas. What happens on your street with your home and your price point is always can vary. So always talk to your Long Realty agent about that and to get specific. So this chart here, what we're looking at is these are closed residential home sales in the Tucson metro area. And on these charts, we've gone back to 2010 in many of these because we want to show you not only what happened this last year, but what the long-term trend is over the last decade plus. And you'll see we've been on a continual growth pattern since 2010. In 2021, there were a little over 20,000 home sales in the Tucson area, which is up about 4% over the year prior. So a very, very strong year, strongest sales year you can see in a long time, almost double where we were at in 2010. As we look at other areas across Southern Arizona, Green Valley was up 8.5%, as was Sarita. Sierra Vista was up 13%. And when we start talking about Phoenix and other areas, they were up 4.5%. So really what this is showing is a very, very strong demand by buyers. And despite some challenges in working through the market, was a very, very significant sales year. When we look a little bit north, I mentioned Phoenix was up 4.5%. Other areas around the state, some were up, some were down slightly, but in those areas that were down slightly, it very well could be that just not enough listings to match the demand that was going on, and that's why sales were down. It doesn't mean that those markets slowed at all. Yuma was up over 8%. So very, very strong demand side by buyers, and this is driven by a lot of factors. Very, very low mortgage rates, which we'll talk about. Appreciation happening in the market, but also the pandemic and lifestyle changes for folks, demographic drivers. So there's a lot going into this demand equation that doesn't just appear and go away overnight. There's a lot happening there. One of the there's a lot of different segments of the market, but one segment we just wanted to point out that's had very significant activity is the luxury segment of the market. And this is in the way this is being measured is homes priced $800,000 or higher. And when we look at these trends for both Metro Tucson and the Phoenix area, when we go back to 2010 through, let's say, 2018, 19, we see a rather flat level activity, some slight growth. But look what's happened in the last 2 years. In 2020 in Tucson, there were 426 closed luxury home sales, up from 282 the year prior. But look what happened last year, 895 closed luxury home sales, which is more than double the year prior. And if we look at Phoenix, very similar, almost double what it was year prior. So we've seen a huge, huge growth in the higher end of the market. And some of this is driven by folks retiring early or buying homes and moving because of remote working. They're able to do that and then plan their retirement the next few years, but move now. There's been gains in home equities and quite frankly, in the stock market that folks are using. And it just, and it goes to show that folks that have the means are finding ways to make lifestyle changes and buy, and the confidence in the high end of the real estate market. So very, very strong activity there. That's the demand side. So I think you can see we had a very, very strong year, lots of demand, a lot of competition with buyers trying to find listings to purchase, situations where there's competitive bidding happening and multiple offers to work through. But if we switch to the other side, the supply side of the equation, you've probably heard in the news, the terms that there's a listing shortage or there's no listings, et cetera. And we wanted to kind of talk about this for a second. This is a chart that shows the active listing inventory. And basically what it does, it takes a snapshot every month of how many homes are on the market at that time available to be purchased. And you can see this number has, trend line has gone down throughout a housing recovery. And, even in the last year, we ended the year with about 1,500 active listings on the market in Tucson, where normally in a more balanced market, we'd probably see 4,000 or 5,000 or 6,000 listings available at any given time. So not a lot of listing inventory. Phoenix, very, very similar trend line. You can see we ended the year with just a little over 5,000 active listings available for purchase for a metro area with a population of over 5 million. So you can kind of do that math and realize it's very competitive. Now, you may be looking at these charts and asking yourself, wow, there's no listings. And you may have heard that. That's not entirely true. So I want to share with you some information here. What the previous chart showed was how much inventory is available that hasn't been sold yet. This chart here shows you the long-term trend of how many new listings come on the market each year. And it's very interesting if you look at this, the blue line is Phoenix, the gold line is Tucson. And you'll see that for the last 10 years or so, very, very consistent in both markets, the number of new listings that come on the market each year. And in fact, in 2021, in both markets, there were more new listings than there were in 2020. So if you're scratching your head saying, well, I hear there's no listings, and here you're showing there's the same number of listings, what does that mean? Well, what it means is that this isn't necessarily about a shortage of listings. It's about a huge increase in buyer demand. And you have more buyers trying to get the same number of listings, and they're just selling very, very quickly. So they're not sitting on the shelf waiting for someone to buy. They're getting absorbed within days. And that's really the difference here. It's the same number of listings coming on or even slightly higher. It's just they're being sold very, very quickly. So if we explore this a little more, if we look at the days on market, this is how long it is from a listing coming on as a new listing to when it goes under contract. What's that time period? And you can see that going back to the late 2000s, 7, 8, and 9, I mean, we were in Phoenix, 90 days, 80 days. Tucson was over 100, 120 days. And then as the market continued to improve, we see that number down to 60, 50 days. But look what happened in 2021. In Tucson, the average days on market for a listing was only 17 days. In Phoenix, it was 21. That's, down in Tucson, almost half of what it was the year prior. And it just goes to show what's happening with these listings, that they're hitting the market and getting sold right away. And that hopefully that kind of makes sense. But it shows the pace and the fast pace and how things were moving. This is a different way to look at it. If you look at the current market in Tucson and you map out the days on market and when things are selling and break that down, by day 3 of new listings being on the market, a third of those properties have already sold in 3 days, a third of the market. By day 4.5, not even to day 5, day 4.5, half of the properties that came on the market sold. And after a week, over 60% have sold. So you can see here with this chart, most of the activity is happening in the first week or so, and then it kind of tails off. And if you're a buyer, it really gives you a perspective of buying homes. You have to jump on them when they come on the market right away, because if you're looking for things that have maybe been on a while, it's going to be much, much lower, and things are selling very, very fast. So it just shows you the dynamic that's happening in the marketplace. You put all this together, you take a high buyer demand, and at the same time, the same number of listings, but a much higher demand. What does that mean for the market conditions? We talked about what's a buyer's market. Well, that's when, things tend to favor buyers because there's a lot of listings on and not as much buyer competition. We talk about a seller's market where there's less inventory to the buyers and lots of buyers. So the sellers have a little more leverage. Where you can see where we've been in this chart, about 6 months is considered neutral. And we've been deep into a seller's market for not just this last year or two, but for some time. But it's gotten even stronger over 2021. There were times in 2021 where we weren't talking about months of inventory, we were talking about weeks, potentially down to 2 weeks. So what that means is at any given time, if you took all the listings on the market and at the current sales pace, everything would sell out in 2 weeks. That's what that means. And that shows you how fast that is. We've ended the year at about 1 month of inventory. So very, very deep into a very, very strong seller's market. And we'll talk about where we think maybe this is heading in 22 in a couple of minutes, but it kind of puts all these elements together. When you have very high demand competing for the same number of listings that have an increase to match that higher demand, what happens is that's going to impact price. And this is residential median home sale prices. And you can see we've had a steady increase back over the last 10, 12 years. Historically, the US average price appreciation or increase year over year is 3 to 5%, which we kind of were in that range. But if you look what happened in 2021, we've had this huge increase. In Phoenix, the blue line, we went from a little over $336,000 to $434,000. It's almost $100,000 increase on a median home sale price. And in Tucson, we went from $274,500 to $341,000. So all this pressure on the listings and this competition has driven up pricing significantly in the last year. And if we look around the state, what does that look like? Well, Tucson, Green Valley, we're up 21% year over year in sales price. Sahuarita right about the same. Sierra Vista is up 13. Phoenix up 26. And you can see around the state, in most cases, we're 20% or higher. Now, this, we all believe that a 20% year over year home appreciation and price increase is not sustainable. We don't expect that. And that's one of the things we'll talk about in a minute about where we think that's heading this year. But it did add a lot of equity to a lot of homeowners this last year and also help with other situations. But, realistically, folks at the entry level of the market can create some challenges for folks. And there's an affordability thing to watch here in terms of home prices. Let's talk about mortgage rates for a second. We had very, very favorable, attractive mortgage rates in 2021. If you look back at 2019, that blue line is the 30-year fixed mortgage rate. And you can see that's when it started to trend down. And we went from almost 5% down to low in late 2020, around 2.75-ish. So we were under 3. For most of 2021, we bounced around 3%, a little bit under, a little bit higher, was in that range. That tick up you see lately is in the current month, in January, and currently we've seen rates tick up a little bit. We'll talk more about that in a few minutes. But when you take a price increase in the home sales, and then you look at what happened with mortgage rates, you can see that homes did appreciate in 2019, but the average monthly payment on a home stayed flat from 2019 through 2020. And the reason is that drop in mortgage rates was enough to offset home price increases and kept monthly payments even. And that's, you see there, the flatness for about a year and a half, 2 years. But it's caught up to us in 2021 because with prices going up 20% plus year over year and a slight tick in mortgage rates have really now impacted people's monthly payment. So in Phoenix, we've gone from a little under 1,300 a month in monthly payment at the end of 20 to 1,763 a month at the end of 21. Tucson, a little over $1,000 a month to now 1,400. Now, you have to put this all in context because even at 1,400, let's say in Tucson, and 17 and change in Phoenix, it's actually below comparable rental rates, which have gone up even higher. It's still, compared to a lot of the markets in the country, very affordable. A lot of those are even at higher rates. So it's the context, but you have to be aware that monthly payments have gone up. One of the things we also looked at this year is what did we see in consumer behavior or trends besides the really high buyer demand and those things. One of the things, and this isn't just for real estate, this has been an overall consumer trend, is about convenience, whether it's ordering food to be delivered to your house or other things that are shopping online or other types of convenient factors. And that's impacted or been looked at what folks want in real estate. So for some folks, there is a attractiveness of the convenience factor of doing a immediate offer, cash offer with what's called an iBuyer. So these are institutions that are buying homes, closing quickly so that people don't have to look at the, they can get a convenience of knowing what they're doing and selling and not showing. For many that may have an interest in this, there's a premium to do that, and they've decided to traditionally sell to maximize their equity. But there is a percentage of consumers that look at this and are doing this. So in Tucson, it's been about 5-6% of the homes sold went this route with immediate offers. And in Phoenix, it's up to about 10%. So at Long Realty, we've really been studying this. This isn't just a 2021 thing. This has been going on for a number of years. And we realize that consumer behavior can change and shift over time. And that for some sellers, they really like the convenience factor. What we've done is bridge that with still having an agent to work with to walk you through your options and understand everything. So we've recently rolled out or announced our own immediate offer program called Quick Buy. So if that's something you're interested in, you can most certainly go to our website, to longrealty.com, or talk to your agent about it and get more information. But that's a trend we've been seeing with sellers, is some are opting to sell more from a convenience factor and then move on with whatever they need to, because it fits their lifestyle. But we'll always keep watching consumer trends, but that's one of the things we've been seeing. So with that, that kind of puts a perspective on 2021. And Renee, maybe you could talk us through a little bit about what we think and others will think will happen in 22.
Yeah, absolutely. Thank you, Kevin. So let's spend a little bit of time talking about what economic experts and our Long Realty experts think is going to happen here in 2022. And the first thing that we really need to talk about, because as Kevin alluded to, is mortgage rates. Mortgage rates is something that is in the news all the time. And the good news is that we don't see them skyrocketing to 10%. We don't even see them going to 5%. We see them staying, all the indicators suggest that we will be between 3.5% and 4%, which in this market is still a really good price and a really good rate. And that's for a 30-year fixed loan. So once you lock into that, you are good to go for that for the full term of the time that you own that home and have that loan. So I think that that's a critical thing. And as Kevin alluded to, this is critically important to remember that a little bit of an increase in interest rate does make your payment go up. So it's important for you to be aware of this. The second thing, of course, that we need to look at is price appreciation. And Kevin went through some really good statistics about what the market has done that nobody ever thought was even possible, going up 20+% in 1 year. And what do we think that's going to do this year? Well, the good news is that prices probably will continue to increase, but they look to be, in all the forecasts from all economic indicators, say that it will go back to what we allude to is a normal market, which is a 3 to 5% appreciation. And that's a good market. And I think that that's something that we will continue to see. And it will help with hopefully the inventory, bringing those buyers and sellers back a little bit closer to the middle and balanced. The other thing that we need to look at is how many homes are actually going to sell. Like Kevin was talking about earlier, houses, we had the same amount of houses coming on the market as we had in all the past years, but the difference is the demand. And we still see home sale projections being very strong. We still see it being up in the mid-range to the $7 million house, 7 million houses selling in the year. Now that is high compared to other years, and that is about where we ended last year. So we think again that the company is going to be, and the communities are going to be right where they were last year. The difference is that we see, and the reason for the appreciation difference is maybe there's not the balance between buyers and sellers will continue to become more equal. Then we look at the next thing is we asked our agents, our expert agents. They're the ones that are out there in the market, working this market day in and day out, and they know what they're seeing. We asked them, how do they think residential real estate listings will trend in 2022 as compared to last year? And you can see that just like it has for the last 10 to 15 years, they think it's going to remain about the same and maybe go up 1 to 5%. So almost 63% think we're going to be right in that 1-0, about the same, to a 5% increase, which will help keep our inventories and our buyers able to look at property. The second question that we asked them was, is there a shift from a strong seller's market to a different type of market? When we looked at this in 2021, we were a very strong seller's market. And you can see that our agents are thinking, yep, we're still going to be a seller's market, but we are going to be more in line with the not so strong in the seller side, and begin to maybe get closer a little bit to that balanced market that makes it easier for buyers and sellers. So as we look at the next year, there's a lot of things to take into account, and there's a lot of things that when you start looking at it, whether you're a buyer or a seller, there's different things that you need to be considering. And so I'm going to turn it over to Laura, and she, along with Matt and Casey, are just going to try to answer some of those questions so that if you're one of those people either buying or selling, hopefully we can give you some good advice. Laura?
Great, thanks, Renee. Just to give you all perspective, Casey supervises directly over 300 agents, and Matt manages an entire regional mortgage company here in Southern Arizona. So they've heard the questions that are coming from buyers and sellers. So I'll start with you, Casey. What would you say to a seller who would like a bigger place or a smaller place, but they don't want to get into a bidding war, and they certainly don't want to compete with buyers who have cash offers and investors? It's an intimidating landscape.
It can be intimidating, but I think the real issue is, not every transaction has a bidding war. Sellers don't always take cash over a loan, thank goodness. And, they don't even go for the highest bid every time. There's terms sometimes play a stronger role than price. And I think that's really important to keep in mind. Call your agent and go over a goal, develop a strategy on finding that larger or smaller home that you want. And don't get caught up in the assumptions about other buyers. If you want to find that home, your agent's going to help you find it and help you negotiate the terms that will be right for you and allow you to get it. As Kevin alluded to, we've sold a lot of buyers are very, very happy with their new homes, and we can't be really offset by what the news picks up and what people talk about is happening in the market. It's certainly not on every transaction.
Makes sense. But Matt, I'm not going to step off of this cash question yet. There are a lot of people out there that say cash is king. Is there such a thing as a loan program that can look as secure as cash?
I think absolutely. Cash is viewed to be king because it's perceived that there's less red tape, less worry to go through when they're getting a mortgage. But, I would say from my perspective that a fully pre-approved buyer, also in some cases, they can execute an appraisal waiver, and that would remove that variable from it. It could be just as secure as a cash offer. Also with us at Prosperity, we have a closing guarantee that if we do not close on time for a pre-approved buyer, the seller will get $5,000. And I feel like that's a very secure option for a seller that can compete with a cash offer.
And for the sellers, it's cash for them after closing regardless. Casey, what about the seller who says, if I sell my house today, what am I gonna find to get into? There's nothing out there to buy.
Honestly, we do hear this one quite a bit. You know, if your goal is to move and your fear is to not finding the right house, I think it's really, you have to get serious about finding that right house. You know, you can't look for a house, as Kevin alluded, most of the houses, 60% sell in the first week. You can't go look once a week and expect to find your house. We have a lot of houses coming on the market every single day, and we have a lot of buyers purchasing those houses. One of the things we can do is we have pools that we can share with buyers and sellers. We have people just like you that are in the same boat. They have a house to sell, and the house they want to buy might be your house, and the house they want to sell might be the one you're looking to buy. And so we have those things that people aren't ready to go on the home. They're not inventory homes, but they're clients that we have kind of in-house, that we have systems that we can share that information and assist you in finding your next home, and also possibly finding a buyer for your house too.
The network.
Yes.
So Matt, how can Prosperity Mortgage help a seller who's found a house they want to buy, but they haven't sold their home yet?
So the hot topic or the buzzword going around with this is going to be a bridge loan. And we have a program that acts as a bridge loan, but rather than putting the financing on their departure residence, we increase the loan amount through a second mortgage on the home that they're buying. And in order to do that, we fully leverage this new home. And when their home sells back east or across town, wherever it may be, they can use the funds from the proceeds of that sale to pay off their second mortgage, and they're left with really great terms on that individual mortgage, and that's what's left on the home. So it's a really great answer. And again, it's something that puts minds at ease when people are trying to do exactly what you explained, buy before they have to sell.
Okay, so it's possible. Okay, Casey, we still have sellers who are reluctant to put their homes on the market and have buyers trooping through and spreading their germs. And but they'd be willing to sell if one of your agents had a buyer. What do you say to them?
This is you had the word germs, but we've had this question a lot. We've often had sellers, I'm going to be away for the summer. If you find a buyer, I'd love to sell my house, but I don't want it on the market while I'm not here. So, we've dealt with this for a long, long time. And like I mentioned before, we have qualified buyers waiting to purchase your home. We can market your home to buyers specifically looking for similar homes to yours, not to the entire world, but just to specific people limiting the people that would actually see your house. But we know that the people that would actually go in, the traffic you would have would be qualified buyers looking for specific properties just like yours.
Well, good. One follow-up question to that, Casey. So the house sells, or the person's ready to put their house on the market, but things seem to move really fast from everything Renee and Kevin said earlier. What does market ready mean? I hear agents saying you have to have your house market ready. Does that mean you got the carpets cleaned?
Boy, the market ready has changed. I remember years ago when you list a house, you put on the market the next day. Really putting your house, pictures to me are so important. Having your house staged, clean, going through the house and tidying up and fixing things and changing things and moving things in and out to make sure that those pictures and that first impression that a buyer would have is really showcasing the house in its best condition. We get one look, we get one opportunity to impress that potential buyer. And I think it's really, really important to allow yourself time so that you can have that done. It sometimes can take a couple of weeks to do that before you want to actually show your house, and gives yourself the opportunity to attract the most qualified, best buyer for your house in its best condition.
And if a seller's going to buy after they sell, should they wait until they sell their house to contact a lender? Matt?
No, go ahead, Matt.
Absolutely not. I think that we want to be part of this plan from start to finish. And, in some cases, just, to your example, Laura, if doing a cash out refinance on their departure residence is the best way for them to move forward, by listing their home, they could put up hurdles or maybe even exclude themselves from achieving that. So definitely want to put a plan in place as early in the process before they make any moves, especially listing their home.
It's very complex. In a good market, people tend to say, hey, I can do this myself. I think this is the last time you can probably do it yourself. Let's talk a little bit about the buyer perspective now. I actually, in my family, am going through a buy-sell situation. My daughter and her new husband live in a condo that she bought before they were married. and they want to buy a house. And of course I said, no, this might not be the right time to do that. There's a lot of competition out there. And of course, your children never do what you tell them not to do. So they found a house, and Dylan's getting a loan on it with Prosperity. Carly's house is going on the market very soon, and they may well close both within 2 weeks of each other. So it can be done, but you really do have to plan it ahead.
Absolutely.
That's for sure. So Casey, what do your agents say to a buyer who doesn't want to get into that bidding war and possibly overpay?
I think the term bidding war and overpay might be a little dramatic. Yes, we often deal with multiple offers and even multiple counter offers, but it's not necessarily a war. Having an agent negotiate and have your goals in mind and have a strategy set for you will enable you not to get involved in the drama, not get in a situation where you are overpaying. If you know what you want to pay and you know what you've been looking at houses and the value of what it's going to cost to get what you want. I think it doesn't have to be overpay. I think you have an agent that'll walk you through those steps, and it doesn't have to be that dramatic.
How about the ones who are renting and say, I'm going to wait until this market cools down?
Well, that's a little bit more complex. We hear a great deal about inflation, and rents, of course, are going up at a very rapid rate. We know your mortgage payment is fixed. And I know that, renters that had this conversation a year ago and said, I'm just going to wait. Well, now they're paying a significant more for their rent. Prices have gone up and interest rates have gone up slightly, but they're not in a better condition this year than they were last year. And yet nothing, and as Renee alluded to as well, nothing is saying that interest rates are going to go down. And so I think it's really important that this is maybe not as great of a market as it was last year, or maybe the opportunities aren't as lucrative, but it's still an amazing market, and you still have the opportunity to offset what it will look like next year.
Matt, do you have anything to add to what Casey told us?
Casey hit it right on the head. Kevin illustrated exactly what the cost of waiting is with the chart of showing what monthly payments did. I think the eye-opening piece is that, Renee discussed, and so did Kevin, about interest rates going up. They're going up, but they're not skyrocketing. But in the cost of waiting perspective, in a $400,000 loan, a half a point in interest rate could increase your monthly payment by $100 a month. That could be as much as $36,000 for the life of the loan. Plus we add that appreciation that's going to be right around that 5%, and comparing that to rising rates, whether that's rising rents, whether that's a year, 6 months, then you're paying rent towards somebody else's investment rather than your own. And so the cost of waiting, if you put it all together, can be quite astronomical. And, with rates where they're at right now is the perfect time to buy. You just have to have somebody on your side to help you find that home.
So things are moving fast. We've established that buyers who have something to sell need to be able to move fast when they find something they want to buy. Their house has to be market ready. They need to have financing plan in place. What does that look like, Matt? What's a financing plan before you've even found your house?
Financing plan in place means that we are going to go through a pre-qualification or even a pre-approval process. And that's where we look at, everything that we can put together to help these buyers achieve their goals. Again, we talked about the bridge loan. We talked briefly about cash out refi on a departure residence. Really what we aim to do is take it through that pre-approval process and start those conversations early so that every plan is on the table and we can have a full cohesive plan moving forward. That's not only going to help the buyer know exactly what they're looking at for their sales price, but it's going to help the agent when they're helping them look for a home and know what to look for, and look for those houses that are popping up on the market on day 1, 2, or 3. A pre-approval and a pre-qualification through us is 100% free. So a buyer has nothing to lose by getting the process started early, and always having a plan is the best way to achieve your goals.
Okay. Casey, you and I hear all the time that buyers are getting market weary. They've been in the market for a little while. They made a couple offers. Maybe their offer didn't get accepted, and they say, I'm just going to take a break now and see if something comes along. What's your best advice to them?
You can't win if you don't play. stay in the game. Lean on your agent to help you stay in the game, to keep your spirits up. If taking a break might enable you might miss the house that you want. The house that you've been looking for happens to come on while you're taking a break. Stay in the game. You don't have to go search down every single house that comes on that is close. Really give it take a good look at it before making an offer. Make sure it is the house you want, and then negotiate strong. If you keep on track and you keep consistent with what your goals are, I think it's worth staying in the game and making sure that you find that house you're looking for. You're gonna have the house longer than you will have the chase to get it, and I think it's really important that it's worth it.
Good point. Good point. And I've heard many agents say, if you're tired of watching the market, I'll watch for you, but you better answer my call on the first ring.
Absolutely, great advice.
So we looked back at the last market. We've established that there's many listings coming on the market or more than there have been in prior years. So there's plenty of things to buy. You just have to have all your ducks in a row. Renee, back to you.
All right, thank you so much, you guys. Those were great topics. I know that any buyer that's listening out there that wants to buy, or any seller that's thinking about selling, you answered one of their questions in their head. So we appreciate that. It was great information. And as we kind of come to an end here, we are certainly going to open it up for questions that have been put in the chat. But before I do that, I think I just want to say that we all know that when we're looking at our retirement and planning for our retirement, we have somebody helping us with that. And when we're looking to go on vacation and we're trying to figure out where to go and when to be there, we're planning accordingly. We're doing it ahead of time. And I want to say, if you're looking to buy or sell a home in today's market, if you didn't hear anything else, I think we established you need to have a plan. Have an agent, have a lender, have a team. Before you do anything, let them know what your goal is. And I promise you that we will help you get to that goal, whatever it is, as long as you've got the team to help you. So with that, I'm going to turn it over to Kevin to see if we have any questions.
We do have a couple. We probably have time for one or two quick ones, but if we don't get to your question, we can most certainly answer it in the chat. I just want to add one thing before I read off the first question, is that, if you've been attending these, we've been really, especially even before the pandemic hit, but during it, we've been very, very closely watching the market. We've talked about inflation before, but I think we're all sitting here today realizing that inflation was originally projected to be a very temporary situation because of supply chain issues and those kind of things. And it seems to be deeper and more protracted. And a lot of folks are feeling that inflationary in their bank account and then their pocketbook, because everything is rising. And this is one of the areas you can take some control and control your financial future, where you can lock in your biggest expense probably with real estate, some of the things you can't control. So just a reminder that I think that's giving more emphasis to buyers too in this market, is what's happening with inflation. But so speaking of the pandemic and everything, we had talked about, and we got a lot of questions early on about, will the market crash? And there was concern about foreclosures and the forbearance programs. And we really didn't talk about that today. And we had a question about that. Are there any concerns still out there? Renee, I know you've been kind of tracking this. Could you at least speak to, is that something that should be on our minds or not? Is that coming back? Is that, old news? What do you think?
Well, I think really good question, first of all. And I think that all the indications that we see in the market that we've already talked about today in regards to the amount of appreciation that people have received in their house, that they do have equity in their house. So if there is an opportunity where they're unfortunate in a situation where they're not able to make their payments, the opportunity to sell the house with the equity that they've worked up is there, so that we don't believe that we're going to have a tremendous amount of foreclosures happening in our market because of that particular piece. And that is what we've seen in all of the economic indicators across the country, is if the appreciation has been there in the market and there's that value that's there, people have the equity to be able to sell that house if they are in the unfortunate situation that they need to do so.
Yeah, and I would just add to that. I mean, employment's come back pretty darn strong in a lot of cases. And I saw a statistic the other day. This is a national average, but the average homeowner gained $56,000 in equity last year. That's real money that, can keep them out of those situations.
Right, exactly.
Yeah. One other really quick question before we wrap it up here. New construction. So, what's happening with that is, it seems like there's hammers flying, but, is it helping? Are they struggling? If anybody wants to chime in, Casey or Laura, you may be close to this topic, but what's happening with new construction?
We know that permits are high, but closings are low. And what I'm hearing most frequently is delays in closings due to supply chain and labor shortages. Anything else on that?
I think it also, when you sign a contract on a new construction, some of them have spec homes and we can do it much quicker. But if you're looking at a year, year and a half, the good news is, as a buyer, you're locking in your price and you might have a great deal of appreciation before you ever close on that property. Builders are aware of that as well. And if they can't deliver a property quickly, they don't want to sign up and sell it at today's price, knowing that they're going to see their cost of building that home is going to go up over the next year. So they're managing the release of lots, and they're controlling the how many they sell, and it's slowing things down a little bit. But it's still, we're selling a lot of new construction, and there's still a lot of opportunities out there. And I think we're seeing a little bit more specs, so people are getting a little ahead, thinking that they could sell them if they had them, and they know if they build a house, they know what it cost them to build it, and they can set the price accordingly.
Well, thanks. I think, keep those options open, and your agent's another thing they can help guide you with how to best navigate that. But there's some headwinds on that front too. It's not the solution, but there are options out there. So I think that's all the time we have for questions for this one. Again, if something pops up after, let's keep the chat going. We'll type in our answers or connect you to get the right answer. But I want to thank you all for a great conversation, and hopefully everybody take things away. And we'll do more of these. When markets shift a little, like this year, it's still going to be a good market, but it may shift a little bit. That's something you definitely want to keep an eye on, and we're here for you guys. So thanks, everyone. Appreciate it.
Awesome.
Kevin.
Thank you.
Thanks, everybody.
Thanks. Bye.